Hi, welcome to this video day. We are on the 27th of October. It's Sunday. Just going to be looking at the US dollar today. We look at the USD against a number of other currencies, and we're just going to be going to the charts in a moment. But the week coming up should be very interesting in terms of USD pairs. We have the Fed coming up. Now, in terms over the last few weeks or so, the dollar has corrected generally to the downside. Now, are we going to see a lot more downside next week, or could the dollar mount a substantial rally? I think, Fed next week will create plenty of volatility. I'm just going to go through my views in terms of some really good risk reward USD pairs. So let's go to the charts and take a look at them. But just before we do so, obviously, please keep in mind it is my view as of right now. It can, of course, change in line with the market conditions and action. If you want all our trading techniques, daily technical sentiment analysis of 14 Forex pairs, you can get lifetime access to our member center on the link beneath this video. And I'm just doing a bit of weekend analysis in the member center, so I'm just going to use the charts from there. So let's go and take a look at them. Right, just in our member center, just very quickly before we go and look at some charts, I'm just going to explain to new viewers very quickly how we do our analysis. If you're already familiar with how we do it, skip forward the next 3 minutes. Now, in terms of the charts, you're going to see they're all daily charts. That is the time frame that we time off. We don't use any market orders. We set all our orders in advance, and we'll only look at price action twice a day. Once in the morning London Open, then we'll look at New York close, see if there's any changes we need to make. So we don't screen watch, we don't do market orders. We're not after small moves, we're after bigger moves. 200 pips is the minimum that we go for in terms of profit objective. We want 300 pips, 500 pips or more if we can get those sorts of trades. Now, in terms of our charts, they tend to be very clean. We do not use many levels of support and resistance at all. We only want meaningful levels that, we feel there's going to be really big institutional order flow around the levels. To find them, we use the weekly charts and the monthly charts, see if those big levels back up the daily levels. If they do, that makes them more valid for us. And in terms of keeping our technical analysis clean, we'd like to know the sentiment towards the fundamentals behind the chart. So we'll get a directional bias before we implement our technicals. That helps us keep the technicals very simple. We will do our own sentiment analysis, but a key tool for us is a free tool called the CFDC Net Traders Positions. In terms of the tool, totally free. And it tells you where actual big money is sitting in the markets. Now, if you know where the big money is sitting in the markets, can alert you to trend changes and also help you postulate how far a move might go. When you know the buying and selling power behind the chart, you can't just say, a move might be 300 pips just looking at technicals. You need to know where the big money is behind the chart. So I will make reference to the COT net traders positions as we go through this video. Now, in terms of the US dollar, before we go and look at individual pairs, what we are going to do is go and look at the general dollar index, which is the dollar against a basket of currencies. And we're also going to look at stocks, which will have an influence on where the dollar goes next week as well. So let's go and take a look at those charts first. Right, just on the dollar index, which is just a general indication of dollar strength or weakness. It's the dollar against a basket of currencies. You see a nice fall here, and we try and hold above this 20-day moving average. Then we crack it. Look at that for a sell-off. Now, that sell-off is all to do with a bit of risk on, because traders are thinking that trade wars are solved. We don't think they are, but that's what traders think. And also on the perception the Fed is going to cut rates next week. Now, in terms of the Fed cutting rates next week, if you look at CME FedWatch, which is an indication of market expectations, a free tool, you'll see the market position 93% for a rate cut. That's very high, and you've got almost universal consensus the Fed are going to cut rates. Big tumble down from a pure technical perspective. And when we look at the individual pairs, we'll keep what I'm just about to mention in mind, which is when you have high volatility, you come outside of an outer Bollinger Band, we're normally looking basically for, in this case, the selling to abate and a rebound to occur. And you do get a little rebound on this red candle, but we settle on the outer Bollinger Band. Okay, but the low, can't get to that though. That was a big candle down, come in blue, a little bit of upside. I personally think there's more upside to come. Bad news is in for the dollar, and I just don't think the the Fed is as odds on to cut rates as the market thinks. They don't need to cut rates. Yeah, if you look at the economy generally, they might decide to hold off and just say, well, we might cut further down the line if conditions dictate. If they do cut, it's kind of in the price. But yeah, mentioned it on my blog the other day. What I would consider to be sensible analysis from, let's say, Goldman Sachs was one example I gave that says, the Fed could well stay on hold, and there is a couple of other big institutions I mentioned, who I would kind of say gave sensible advice. Yeah, the Fed do not need to cut. Of course, they could, but that's in the price they could well hold. And the dollar, when she comes back in here, the dollar index, that alerts us to start getting in to individual dollar pairs. So we're generally bullish of the USD in the pairs that we're going to look at, except for two where we're bearish of the dollar. I'll come to the individual pairs and the exact levels of entry, stop, and target we're using in just a moment. But I think dollar is going to be hard to take out 97. I could see more upside coming. Now, in terms of the dollar, it does tend to suffer in risk on. So when you got optimism about trade wars being solved, the dollar softens a little bit. But let's go and have a look at stocks very quickly. This is the S&P 500 index. And sorry, let me just get my notes. I can just move my screen slightly. There we go. S&P 500, you can see multi-year highs here. Down. Nearly get to them. Down. Up. Friday, blue candle, touching on multi-year highs, but the dollar didn't soften. Now, stock markets indicate risk on. The dollar hasn't softened. That's showing us that basically the dollar is oversold. Could we break to new multi-year highs? Yeah, possibly. Don't think we could sustain a breakout, though. It's mostly company buybacks, buy back their own stock. This market is not supported by mutual fund retail buying, and I put that means an unhealthy bull market, which it is. Global economy is slowing up hard, and stocks near multi-year highs. Out of touch with the fundamentals, but markets can be obviously a little bit crazy. I think if we break up, I don't see too much downside in the USD. But if we break down, then I think the USD will gain traction to the upside because it's also a safe haven currency. Right, now what we're going to do is we're going to go and look at some individual USD pairs, and I'm going to start first of all with the majors and Euro USD. Euro USD first of all, and for me this is probably the most boring of the major currencies. Why? Just simply because the volatility is so low and has been for a good few months. From our perspective, trading euro short since we topped out into 114, and we got some nice short trades. Eventually got stopped out. Tried going short again, got stopped out. I think I probably put my stop a little bit too close, but we've sold the rally failure outside of the outer Bollinger Band, and down she's come, but it's only like 40 pips. Do I see the euro mounting a big rally now? No, not at all. I think the rally, bigger trend is down. The rally is a selling opportunity. We rallied a bit on general risk on, obviously a bit of optimism about Brexit negotiations and what the ECB might do. Well, the ECB were pretty gloomy in my view. Didn't really encourage the euro bulls. Eurozone is in a total mess from our perspective. It's heading for a recession. Mario Draghi, it was his last time as president of the ECB. I thought he was a really good president of the ECB, actually. Then we've got Christian Lagarde coming up next month. She'll be a disaster for Eurozone. She's just going to want to print more money and put rates even more negative in our view. So I don't see the euro mounting a rally from here. I think probably we're going to go to the downside. We want the volatility to pick up in this pair, though. Just so low. But the interest rate so favours the USD. If we did rally up above 112, which I think is unlikely, of course it could happen, but I'll stop at 112.80, well back from these tails here. I just think institutions will hit for the carry. So I think it's going down, but not the most interesting pair. If you are a euro bear like we are, you're better off selling the euro correlated currencies, the proxies, because they'll move quicker to the downside. If the euro moves down quickly or moves down, they're going to move quicker. It's a good few proxies I actually like, and I'll come to them in a moment. This pair, fairly boring, but I think limited upside and a good amount of downside. Now, in terms of the next pair, this has been a little bit more exciting. It's been one of our favourite pairs, and yeah, well, our favourite currency in recent months has been the GBP. Because when we got down to this 120 level here, a hard Brexit was factored in by the market, and we felt the only way was kind of up. And she does go up there, comes back to test, then she takes off to the upside. This one's near enough 500 pip open profit. Now, I do think you can see my stop 127.80. I put it just behind this level to look a bit of profit. If the dollar really does firm up next week, I think sterling could come down through the 128 level. If it does, we'd look to buy back through 128 or key off this 20-day move-in average with a stop back behind these two blue candle bodies here. Not too much downside. Pound just deeply oversold. 30 years that I've been trading, I've never seen a major currency so oversold, and it was very oversold down here. It's still oversold here. Fair value for it is 140. My own view is, if she comes down, we'll reset entry to the upside. Can't exactly obviously say where we're going to go right now, but I'd be looking to buy strength if we do come down, break through this level. Let's say we do hold this support level, break there, up to there, then up to there. So bullish of the British pound. I actually do prefer it now against other currencies, more so than USD. I think it's going up on the USD, but I think there's more potential for pound strength against the commodity currencies, particularly the CAD. But the pound is an exception in terms of my US dollar view. I am bullish. Right, moving to, actually, before I do move to the next currency, before I forget, sorry, just want to look at the COT net traders positions, because commercials, smart money, large speculators, effectively dumb money. When the commercials built up into the 120 level, that was their biggest long position here for 1.5 years. Okay, really big long position, specs really hard short against them. That pointed to a rally, and you do get the rally, and then the commercials shed off some longs, specs shed off some shorts, but they still have got quite sizable positions historically. And that's what's going to limit GBP downside, because the specs are still so short. So I just don't see much downside in the British pound. Right, moving to the next pair, Aussie dollar. Again, this one's fairly low volatility, but in terms of the Aussie dollar, a long way to go on the downside in our view. Benefited a little bit from general dollar weakness, obviously, and also optimism about trade talks between US and China. Obviously, Australia heavily exposed to global trade, so you get a rally up. But you're hitting big levels here. This level here, obviously, where the previous rally was, and this level here is a big level. It's a round number as well. You're outside of the outer Bollinger Band, but the volatility is pretty low, and you come back within. Don't see much upside for the Aussie, I think. If we can break through 68, the round number, and obviously the 20-day will sneak up as well if prices come down, then I think we'll be off to the downside. Long term, looking for 60, which is a long way to the downside. Interest rate clearly favours the USD. Australia and the interest rates are multi-year lows. Yeah, going down, but I'd like to see a little bit more volatility. Um, but yeah, all the commodity currencies for me are sells on the USD. Let's move to the next pair, which is getting ready for a big move, in my view. Hasn't happened yet, though. This is USD JPY. Now, in terms of obviously bullish the British pound on the USD, I'm also bullish of the yen on the USD. So I think USD JPY will go down. And we've come up to a major level, okay, which is 109. And we're kind of snaking sideways, low volatility, which points, in our view, to a big move. Now, let's say the Fed didn't cut interest rates. Well, Japan has got negative interest rates, hasn't it? Why would the dollar not go up significantly on the yen? Well, my own view is because if the Fed don't cut interest rates, that will create a little bit of nervousness in the stock market and basically, kind of pop the bubble of investor optimism. Okay, and the yen is the number one safe haven. I mean, a little bit early, 108.40. We're at 108.60, so 20 pips underwater. Might take it out and then just come back through this level just in case we pop 109. But I do have my stop reasonable distance back from the level, 80 pips. I think that should be safe. We'll see how we go next week. But yeah, yen could be getting ready for a big move. It's just generally oversold everywhere. And yeah, I like the look of it. If we do break that support level, yeah, expect higher volatility immediately and a move down to chart lows. And longer term, I think we could go to 100. This one we'll see what happens. Now, one pair that I'm really interested in is USD CAD. And in terms of this pair, I did a video yesterday where I featured it in detail. You can check it out. But yeah, CAD has been very, very strong. Probably the strongest of the major currencies. That's just against a basket of other currencies. And my view is there's no more good news coming for the CAD. Mentioned it in the video yesterday. Market thinks they're going to stay on hold. Bank of Canada till mid 2020. They're going to cut way before then, in our view. But yeah, it's done well. Okay, pushed the dollar down, but it's pushed the dollar down now towards the 130 level where I expect it to find support. I'm just looking to buy it on a little bit of strength. Yeah, she comes through 130. I'd look to buy back through the 130 level. I think going up to chart highs, say there's some resistance in between. But what I like about this pair is the COT net traders positions, actually. Let's bring them up. Just keep in mind it is always foreign currency first on the COT. So we're looking at CAD USD. We're obviously trading USD CAD. But in terms of smart money, you can see it just dropping down short as speculators go long and step up their longs. Now, in terms of this short position by the commercials, the smart money, it's the biggest in near enough 2 years. And yeah, when they start going really aggressively short in this pair, the commercials and the specs go against them, you're normally pretty close to a turn. The actual commercials against specs, when they do big movements in this pair, very often a turn. It's pretty accurate in this pair. So yeah, commercials will have expanded their short position because obviously, those positions are from Tuesday. So we've fallen down. Commercials really ramping up. Longs, specs going short. 130 is going to be tough to take out. Of course, it could be just buy back through the level, the minute through 131, although obviously could lower that level up to here, then up to there. Good risk to reward trade. In our view, CAD for us sell on numerous currencies. GBP CAD is my favorite GBP long position, for example, but also like the CAD short numerous other currencies. Right, now let's go and look at some lesser looked at USD pairs. So I think there's some really great opportunities. So let's shift over and take a look at them. Right, on the first pair, which is USD Norwegian Krona, which is an interesting pair actually, because the USD had a really big move up, but it had one decent retracement, which is there. And we haven't had a decent retracement really recently, despite the dollar correcting generally across the board. 10% move up, and there's more to come in our view. If you're trading this pair, watch crude oil, because if crude oil starts to break down, which we think it will, it's heavily bearish for the NOK. Norway is Europe's biggest oil exporter. So through 920, we could be going to 10, maybe even higher. It's a big trend, and a few people asked me, when do I think it's going to end? Well, not too sure it's going to end just yet. I think there could be a lot more upside to come, but keep your eye on crude oil in relation to this one. Now moving to the next pair, there's USD Tri. I did that in an individual video. It's the most volatile pair we follow. You can go and check that out. This one really interests me. It's USD MXN. And yeah, you tend to find with these emerging market currencies, they do really well when the dollar generally weakens. They tend to be the ones that appreciate the most. So the Mexican peso really pushes the USD down hard. Then look at that, we steady up with some candles here. I think that could be the indication. Yeah, now we're steadying up that selling is exhausted. We know from the COT net traded positions that smart money commercials are piling in to longs while speculators are selling. I think this 19 level is going to be hard to take out. So you're just looking for a strong blue through resistance. You could wait for 920 to be safe. Big blue, specs will bail on stop, and then up to chart highs, and then possibly on to 2050. It's a volatile pair, but for a small position, I really, really like it. Moving to the next pair, which is a euro correlated currency, and I did a video on it the other day or a few days back. Euro obviously had some strength, which helped the krona push down the USD. But look, we come down these three candles, this big red outside of the outer Bollinger Band, steady or blue in match, sorry, not match, in line with the close, then blue back within. We'll go long, a little bit of upside since, not too much. This level is a big level. Okay, I think we're going back up to chart highs, then on to 26. Not only will the CZK go down if the euro goes down, I think the euro is going down. If we get risk off or a bit more of a nervous market, that will hurt the Czech krona as well. Okay, because it can be seen as an emerging market currency. So looking for a big move to the upside, 2280 is a really big level. Okay. Also, in the video I did a few days back, which you can check, I also showed the USD PLN, so it's Eastern European cousin. Similar chart setup, both pairs look good. I'm long the USD against both, just treating it as one trade. And I actually think that if you look at the chart, that the euro is going up on the CZK and the PLN as well. But obviously, USD bull, so I've got some long positions in the USD. Yeah, really like the look of these Eastern European proxies as sells against the USD. So yeah, not too much downside, plenty of upside from our perspective. Next pair, NZD USD. It's a similar background to AUD USD, really. Get this nice big move down, rally up. It's a key level here in line with the bottom of that candle, which is a heavy institutional order flow candle. I explained it in a previous video, but it'd be a big effort, in my view, to take out the bottom of that candle. We did come up here to try and take it out, poke outside the outer Bollinger Band, blue trying to get through, red through the round number, red finished near the close. I think we're going down to new chart those, then on to monthly support. Very similar background to AUD USD, if I think I just said that. interest rates low in New Zealand, exposed to global trade, will get hurt by risk off. A lot of downside potential, very little upside in our view. Last pair we're going to look at, and again I featured this in a video a few days back. I think I did it with the CZK. It's a USD Swedish krona. US dollar, nice move up. You do get corrections. Then you get a really decent correction. We spike outside of the outer Bollinger Band. Come back within. We'll go long. Look at that though. That spike tail. Nearly hit our stop. We're a bit lucky to miss the stop, but she rebounds back. Blue on Friday off the highs. If it goes through the highs, just going up. Chart highs then to new multi-year highs. I just feel that Sweden's fundamentals are dreadful for the krona. And also what's interesting is when this get the spike tail down, that was on basically the Riksbank in Sweden saying they might hike rates in December. Doesn't help the krona because the USD bounces straight back. If ever you get kind of what should be bullish news for the Swedish krona, and then obviously it doesn't finish firm, it finishes weak with the US dollar blue, that's giving you an indication that USD might run on to the upside. I quite like the look of this pair. I think we could be going to chart highs then even higher. So yeah, I do like the Euro proxies as you can see, but I really like that USD MXN trade as well. Commodity currency short on the USD. USD try, I haven't covered it in this video, I covered it in individual videos. I'll probably do one next week. I like the look of that from the long side as well. USD in the coming week, obviously we are coming into the Fed, so we'll update each day obviously our view, but at this moment in time I just don't see too much USD weakness this week. I think the odds are for the USD to have a really good bounce to the upside. Only two currencies that I'm looking at the long side, the short side of the USD would be the Japanese yen, obviously, and the British pound. But yeah, dollar, a lot of people say it's going to sell off hard. I'm not convinced. I think the bad news is in the price in terms of interest rates, and I just think, just too much optimism about the global economy and so forth. That evaporates, it helps the USD. But yeah, we'll see what happens in the week ahead. But that is our view of the US dollar. Thank you very much for watching me as per usual. Take care and have a good day.